On the surface, offset accounts and redraw facilities seemingly do the exact same thing. I mean, they both save you interest on your home loan. But there is one critical difference between the two, and this difference could save you thousands of dollars in tax. And so that's what we're going to go over in today's video. An offset account is like a regular transaction account. However, it is linked to your home loan. And so any money that you hold in your offset account is actually going to save you interest on your loan. So for example, let's say you had a $500,000 loan and you had $100,000 in an attached offset account, you're only going to pay interest on the $400,000 difference between the two. Now, a redraw facility is a little bit different because it's actually inside your loan. So if you make additional repayments above the mandatory minimum repayment, it sits in your redraw facility. And you do have the option to take that money out. However, that is going to increase your loan balance again. On the surface, both of these things seem to be doing exactly the same. They're both saving you interest on your home loan. So why then is there this difference? Well, taking money out of an offset account, that's your cash. It's not deemed as part of the home loan. And so when you take money out of your offset account, in the ATO's eyes, there is no change to the purpose of the loan. But when you take money out of a redraw facility, in the ATO's eyes, that's essentially borrowing again. So you did have the loan against the house, you paid that off, and then when you take money out, you're essentially borrowing again. And the purpose of that new loan is for whatever you spend that money on. So this can have big tax consequences. Now, the best way I can explain this is to give you a little bit of an example. So me and my wife, back in December 2012, we purchased our first home and we paid $375,000 for it, which I know is bloody ridiculous. You don't even get a packet of chips for that amount these days. Now, when we bought this home, we always saw it as a short-term stepping stone type of a house. We wanted to buy it, hold it for the long term, but we're only going to treat it as our principal residence for up to 5 years. So instead of paying down the loan, we set up an offset account against the home loan, and we funneled all of our surplus money into the offset account. Fast forward a few years, our home loan and our offset account were at par, and so we were ready to move on to our next property purchase. And so we took all of the money out of the offset account and we put it towards the new home that was going to become our principal residence, and we left the existing home as our investment property. Now, because we used an offset account instead of a redraw facility, when we took that money out of the offset and we put it towards the new home, it didn't impact the purpose of the loan for the existing property. So what that meant was there was still a decent amount of money owing against the existing home, which became a rental property, and so that loan, or the interest on that loan, became tax deductible. Now, if we would have done it the other way around, if we would have just simply paid down the debt owing on that property, we would have built a lot of equity in that first home, and even though the bank would allow us to withdraw the money in a redraw facility, the ATO would deem the purpose of that redraw amount for the new home loan, and therefore it wouldn't be tax deductible. So the bottom line is that offset accounts, they give you a lot more flexibility. You can be very strategic with how you use them because it can save you a lot in interest, which is fantastic, but it doesn't impact the original purpose of the loan, which can give you some greater strategies down the track. But there are a few caveats to this, and that is, well, you normally have to pay for an offset account. So redraw facilities often come free with home loans. Offset accounts normally come in a package and you have to pay a fee for it. If you never plan on renting the property out and it's always going to be non-deductible debt, well, then it's not going to make a difference. And lastly, having money in an offset account tends to make people feel wealthy. So if you look at your bank balance and there's a lot of money sitting in there, that might make you feel richer than if you just have a small mortgage owing. And so you need to be really disciplined when you're using an offset account to make sure you stick to the strategy, you stick within your means, and you don't see it as some bucket that you can just constantly dip into. But that's it for me today, guys. Thanks a lot for watching. If you like this video, please give it a thumbs up, and I'll see you guys in the next one.